Have you ever wondered what the similarities and differences were between an external audit and an internal audit? Let's discover these and more in the next slides. Internal audit versus external audit. Are they complementing or conflicting? Internal and external audit, scope of work. Internal and external audits differ in their areas of focus and coverage. Both internal and external auditors help entities ensure that their financial reporting agrees with relevant accounting principles, that internal controls are working correctly, and that the entity is in compliance with relevant laws and regulations. For both types of auditors, risk assessment is a vital consideration, and a keen understanding of the industry and the entity is required. However, how they do their work is a bit different. Internal audit scope of work. According to the Institute of Internal Auditors, IIA, internal auditing is an independent, objective assurance and advisory service designed to add value and improve an organization's operations. It helps an organization accomplish its objectives by bringing a systematic, disciplined approach to evaluate and improve the effectiveness of governance, risk management, and control processes. Internal audit involves a comprehensive understanding of the organization's internal operations and processes to assess controls and identify areas for improvement across various functions. Internal audits encompass a broad range of organizational functions, including financial operations, compliance, operational efficiency, and risk management. Internal audit findings are typically reported to the audit committee of the board of directors or senior management within the organization. External audit is carried out by independent auditors, focusing on examining financial statements and related disclosures to ensure accuracy, fairness, and compliance with accounting standards. External auditors focus on verifying the financial information presented in the organization's financial statements and providing assurance to the shareholders and external stakeholders through an audit report accompanying the financial statements. Methodologies and standards. Internal audit, primarily guided by the International Standards for the Professional Practice of Internal Auditing, IIA, which outlines principles and best practices for conducting internal audits. External audit follows generally accepted auditing standards, GAAP, established by accounting bodies like the AICPA, which define the procedures and quality controls for conducting external financial statement audits. Steps in the internal audit process. Planning involves: identify the scope, set objectives, consider risk areas, collaborate with stakeholders, use historical data. Fieldwork comprised of conducting interviews and surveys, reviewing laws, policies, and best practices, verifying sample transactions, analyzing data sets. Reporting entails: analyze the information gathered and report the results. Follow-up requires a review to verify that the findings were resolved, identify corrective actions, re-audit the process or procedure, close out the issue when all corrective actions are completed. Steps in the external audit process. Planning requires scope definition, identifying potential risks, and evaluation of the entity's structure and operations. Internal control evaluation entails assessment of the entity's internal controls and processes. Substantive testing involves conducting substantive tests and the IT audit. Analysis and conclusions comprised of analysis of the audit findings and reaching a conclusion. Reporting includes reporting the findings to the audit committee. Internal and external audit similarities. Independence. Internal auditors must be independent of the process, area, or department within the organization they are auditing. Similarly, external auditors must be independent of the organization for which they are providing audit services. Access to the data and resources needed to conduct the audit procedures should be unconstrained. Process. Both audits include three main phases: planning, fieldwork, and reporting. Internal and external audit differences. Frequency. An internal audit plan is determined annually. However, the area being audited may be performed every 3 to 5 years depending upon the risk. Internal audits of the organization are conducted continuously throughout the year. Generally, an external audit is performed annually. Objective: internal audit provides feedback to management on the functioning of internal controls and areas with room for improvement and added value. External audit examines the entity's compliance with guidelines or regulations, for example US GAAP, to meet the objectives. More differences. Reporting and users. Internal auditors generally report to the Audit Committee of the Board of Directors and senior management, while external auditors report to the entity's stakeholders. Main purpose. Internal audit focuses on identifying and evaluating risks, assessing internal controls, and helping management to improve operational efficiency. External audit provides assurance to external stakeholders about the entity's financial credibility, operating effectiveness of internal controls, and compliance with regulatory requirements. Who performs? Internal audit can be conducted by entities' employees through internal audit department, or the function may be outsourced. External audit to be conducted by a third-party audit team, notably a CPA firm, conducts an external audit. Skills. Certifications are not required for internal auditors, but interdisciplinary experience and certification designations are helpful, such as CPA, CIA, CISA, CFE, etc., while certified public accountants, CPA, firms are required when issuing opinions on financial statement audits, SOC audits, etc. Interaction between internal audit and external audit. This interaction involves collaboration, where the internal audit function provides ongoing monitoring of controls and risks within an entity, while the external audit independently verifies the accuracy of financial statements. Having both parties sharing information and coordinating efforts will lead to improved audit quality, enhanced risk management, stronger governance and control environment, comprehensive view of the entity's financial health, and reduced audit costs through minimizing duplication of work and maximizing efficiency. Is an internal audit better than an external audit, or vice versa? As explained previously, despite scope differences between an internal audit and external audit, both types aim to enhance the entity's performance and accountability. They serve different purposes, operate under different frameworks, and have distinct scopes of work. While internal audits serve as an ongoing support mechanism for management and the board of directors, external auditors promote accountability to external stakeholders. At the end of the day, audits, whether they be internal or external, benefit the entity.